Hello and welcome to this micro edition of the Digital Disruption podcast, hosted by Novus Strategy with myself, Chris Williams. And joining me today is Paul Broadhead, who's the head of mortgage and housing policy at the Building Societies Association. Paul, thank you and welcome to the podcast.
You're very welcome. It's great to be here, Chris.
Great. So you very kindly contributed to our recent edition of the Digital Disruption newsletter, which is our printed newsletter. And the topic of the conversation today is just to talk about that article that you kindly wrote. And Paul, you open your article by saying that in 2025 hasn't slowed down even over the summer in terms of momentum. What do you think makes this momentum in the mortgage market so crucial compared to previous years?
I think, for the first time in probably 10 or 15 years, we've got a real momentum about streamlining regulation. And we just haven't had that. So we saw this huge implementation of mortgage regulation, both prudential and conduct, following the crisis, and rightly so, post 2008 and implemented in 2014. The government's come in and said our number one priority is growth, and challenged the regulators to make sure that their regulatory objectives support that growth as well. So we've seen some changes from the Financial Conduct Authority in terms of how they regulate mortgages. We've got the biggest and widest ranging discussion paper we've had over a decade about what's the future of the mortgage market that we want. And we've also had stuff from the Prudential Regulatory Authority, a new government scheme from the implemented earlier in the summer as well. So just a real big regulatory and policy change that we've seen, which hopefully will lead us to end up with a mortgage market that's fit for the future.
Yeah. And it's interesting because you highlight support for first-time buyers in your article around sort of affordability and things like that, and this kind of all links into this. So, like the mortgage guarantee scheme and change to loan income limits. How far do these changes actually move the dial for people potentially struggling to get on the ladder when we link off some of those bits that you just mentioned there in terms of speed and things sort of progressing quicker?
I think the mortgage guarantee scheme's welcome because there are elements of the economic cycle where it's more challenging for lenders to lend at high loan to value, low levels of deposit, which is exactly what first time buyers need. So that's fine. I don't think we're necessarily in a position where we need that greatly at the moment, but it's good to have that there. As you rightly say, affordability is the biggest challenge for first time buyers, and we've seen a clarification from the FCA in the spring about what their expectations are of how lenders stress test. So how much do people need to be assessed to be able to afford before they get the mortgage? The loan to income limit, I think, will move the dial as well, because affordability has overtaken deposit as the biggest barrier. And for me, the loan to income limit was an arbitrary number, and it's about whether individual people or couples can afford that mortgage payment, and this gives us the flexibility to broaden access to home ownership. So that's a really positive start. Some of the other changes we've got proposed over the summer will also help, potentially, changes to interest only mortgages, further looks at affordability, and particularly how we assess later life lending for people approaching retirement or wanting to release housing equity. So but I think the loan to income limits will make a difference, and our estimate from our members is that probably means about an extra 16,500 first time buyers in the first year, which is great to be celebrated.
Absolutely, 100%. And I guess just building on that then and kind of moving more into sort of regulation and market shifts. The FCA's discussion paper feels like potentially a once-in-a-generation opportunity. If you had to pick something that the regulators must get right this time when looking at this, what would that be?
I think it's making sure that we've got a regulatory environment that encourages innovation, that's fit for the future and doesn't stifle it. And what I mean by that is we've seen a change in direction from the regulator in recent years, where it says we're much more outcome focused. So it's the outcome that matters, not necessarily dotting every I and crossing every T in terms of the rules. But with the implementation of the consumer duty that focuses on outcome, and still, hundreds of pages of mortgage regulations, effectively every lender's got the same atlas to tell them how to get to that destination. So we need that flexibility, we need to encourage innovation, and we need to focus on outcome. And when I talk about outcome, it's not just the outcome of that individual product, it's almost the outcome and the impact on consumers' lives. So for example, if somebody can blatantly afford to have a mortgage but regulations stopping them at the moment, they face renting potentially for the whole life and into retirement. Well, that's not a good outcome for them. So actually taking first-time buyers taking longer mortgage term as a product of affordability constraints, but for many of them that is a much better outcome because it gives them a stake in the housing market, it gives them an opportunity to create wealth and build up equity, and it gives them that security of tenure. So we need to recognise that we're here about consumer outcomes and improving people's lives, and regulation needs to enable us to do that.
Yeah, you touched on there, Paul, technology and innovation, and kind of almost technology and innovation being unlocked because of sort of the regulator and how they can sort of help with that. In your article, you talked about home ownership in 2030 sort of won't be achieved with the tools of 2010, which is really interesting because it echoes something our chief exec sort of talks a bit quite a lot, and that resonates with us throughout Novus really, which is this theme of what got us here won't get us there. Where do you see the biggest opportunities for technology to really move the market forward, and where do approaches like horizontal digital integration make the most impact?
So I think you're right. We do still hold on to the tools of the past. I remember when I bought this house that I'm sat in now, in a telephone call from my conveyancer saying to me, "Paul, can you just fax me this document and we'll get you to exchange?" I said, "I'm really sorry, I haven't got access to a fax machine where I am." He said, "Where are you?" I said, "I'm in the 21st century." And he's still asking me for that fax. Things need to move on, and we can't be stuck in the past. But I think digital document and data sharing, digital identity, electronic signatures are all got to be part of the future. And you asked about horizontal digital integration, which I think is a fine phrase. But whatever term we use, it's about using that technology to fit all of the different steps together. So whether buying, selling, remortgaging a home, it all remains, an element of that process is pretty fractious. And with the different parts of the process, from estate agent, a mortgage broker to conveyancer and lender all working separately, we need to start bringing all of that together and be getting the right information to the right person at the right time, and make sure we're only asking for stuff once rather than repeatedly asking for things like identification and address verification at every stage of the process.
Yeah, I couldn't agree with you more. I think one of the things that we talk a lot about around the sort of HDI theme that we've mentioned there in horizontal digital integration is helping organizations across the ecosystem to kind of understand this, really to understand how important it is to move in an incremental fashion towards leveraging technology to change the way in which the property transactions are kind of done today. And there's a lot of transformation fatigue in this industry, which I empathise with and fully understand with. And I say transformation fatigue because I think for many a year, vendors have kind of come into market almost waving a flag of we've got the kind of golden nugget that's going to transform everything. And the reality is, if we're honest about it, in truth, is that the market didn't have the digital maturity across all of the stakeholder groups to move us into this next phase of transformation. And the first phase has been a vertical phase. It's been a phase whereby component parts of the home buying and selling journey have been digitized, and there's benefits to that digitization at a micro level. But when we zoom out and look at it holistically at a macro level, one metric everybody agrees on that's worth measuring is the average transaction time of a property, and that's gone up. So arguably there's a lot of people in the industry that say, well, hang on a second, this digitization stuff, kind of it's gotten us worse because it still takes longer. And the truth is that we're now at a point whereby we can connect the ecosystem up, and that's not necessarily a technology challenge because the tech exists. It's actually a collaborative configuration challenge. I believe, and I think it's important that the industry kind of sees it in that way.
Yeah, I think that's a really, really good point, because as you say, the technology is there, but it's all in silos at the minute, haven't we?
Yeah.
We've got fintech in the financial services, there's legal tech, and which is all great, but it all still sits on its own. And actually having that horizontal integration is vital, because I think from a consumer that's going through the process of buying a house, this is all parts of the process, and it's been parts of the process not for decades but for centuries.
Yeah.
That enabling the faster movement of data and information in a reliable and secure way should be making the process quicker, not longer, as you say. And to me, often people say to me, people want the process to be quicker. I'm not always convinced that that's the case. I think what people want is people will move when people will move. Yeah. I think what people will value is the certainty quicker. Because 100%. Once you've got that certainty, then you know that things are going to happen. And actually, the date it happen can be 3 months in the future. That might suit you, but it's going to happen in 3 months. Not it's going to happen next week, and you get to the end of next week saying, "I'm still waiting for this. I can't exchange yet."
Yeah, I think I couldn't agree with you more. I think speed is an important thing. However, what's more important is predictability. And I think interoperability enables predictability. And that predictability across the market unlocks significant value, because for lenders, it means that, cancellation rates get reduced. There's money's not tied up. It's in the right places. And I think this is why we refer to as this configuration issue rather than a technology issue. Certainly what we're seeing in the market now is the opportunity to change or transform the customer journey. We talk to a lot of lenders at Novus, and we talk to them and we say the same thing. Change is building a better version of the past. Transformation, however, is fundamentally reimagining how we do things. And that reconfiguration of the customer journey by leveraging HDI is really what's going to give that interoperability, to provide the predictability, to be able to say, well, actually, somebody might not want to move in 15 days. They just might be either coming into the UK, leaving the UK, whatever it likes to be. There's things happen, but they know that within X months' time or on a particular date, we want to be able to kind of do that move. And I think we're very much getting closer to that. And one of the things that it'd be remiss of me not to bring up a buzz phrase of the hour or of the year right now is obviously artificial intelligence, and I think that'll play a crucial role. But just kind of move into that now. There's obviously a nervousness about AI in financial services. From your perspective and vantage point, what's the smartest way for lenders to be sort of using or leveraging AI today within their risk appetite without losing that customer trust?
Yeah, I think it's a really interesting and challenging question, isn't it? Because it's evolving. So, this isn't a technology evolution. This is a revolution. If you look at where we are with AI today versus where we are at the end of 2024, it's progressed so much. So there is a nervousness, and I think that's from consumers and from industry about how much trust to place in that and how you can safely and securely adopt it. I think that will improve over time because it's affecting every day, our everyday lives, isn't it? People are utilising ChatGPT and other AI tools now, as opposed to Google. If you look at the metrics around Google searches, it's almost fallen off a cliff because Google gives you a list, AI gives you an answer. Yeah. And it's how we can take that list from an answer to make the process better, more accurate and slicker for consumers. So I think where we are now from a lending perspective, the FCA talks in its discussion paper about AI advice. I think that's a step too far for now. I think it's more about how do you support a mortgage broker or how do you support a mortgage lender to enable them to still have that human interaction with the borrower, but utilize AI to make the process slicker. So automation in back office, particularly gathering information about the customer, to support the underwriting process, for example, having a look at perhaps where there's some discrepancies between what the customer's declared in terms of income and, marrying that up with payslips, bank account information, because all of that back office stuff takes time. We should absolutely use technology to do that and to free up brokers and lenders' time to talk to consumer and making sure they're getting the right outcome for their needs. So I think we're starting to progress with that. At the moment, different firms are moving at different paces naturally, because it's quite scary. If you're a chief executive of a lender, it's quite a scary prospect when you're on the spike for making sure that that consumer outcome is right. So I think we're adopting it relatively slowly. We're curious and inquisitive about how it might play out, but it's vital to get on board with it.
I couldn't agree with you more. I think there's two sort of key sort of threads there that I'd pull on that you've just mooted. One is this kind of nervousness around, if you're a chief exec of a lender, and it's sort of like, well, I don't want to be kind of left behind, but equally we've got this duty of care and responsibility to ensure that, we do things properly. And I think then the other thread is obviously the ability to be able to adopt this technology, but having humans in the loop. And I agree with you. I think from an advisory standpoint, it's probably a step too far just yet. We'll get there, I think, in time. But I think it's that there's an opportunity. I think one of the biggest inhibitors to leveraging the opportunity is actually how data is structured and organised in order for these lenders specifically, or organisations, to be able to leverage some of the AI capabilities that are there. And that nervousness, comes from a lack of organisation in data, having the safeguard and safe harbour environments to be able to trial and test this stuff. But a critical factor is keeping that sort of human in the loop. And I think one of the big bits of advice, certainly from our AI practice, has always been, start, because not starting is a bad idea, but start and proceed with caution. But that human in the loop element is critical. And I do empathise with, leaders within lending institutions that are kind of battling that kind of where's the balancing act here, because it is a balancing act, isn't it? Really,
it really is. It really is. And you're responsible for the outcome that drives. So you need to remain in control of it, but also you've got to trust the tech.
Yeah, you do. And I think it's that balance is difficult to strike. But I think the big takeaway from me probably for people would be, lean into this, controlled environments, organized and structured data, keep the human in the loop, and iterate and learn as you go, and put security and safety at the heart of it, and data integrity. And that's where the protection mechanisms will really sort of come in, but not stifle that advancement in innovation.
Absolutely.
So look, let's talk a bit more about sort of building societies and the human touch. Underpinning an HCI strategy is the notion that lenders don't have a technology problem, and I touched on this before. They've actually got a configuration problem, where reorganizing data systems and people is critical to success for a modern lender. How do you see the balance between digital by default and maintaining that personal human first service that we've just sort of touched on around the AI piece?
Yeah, I think it's understanding what your customer wants, because if you don't get that right, you're not going to have a business for very long. And I think for me, it's that understanding, that notion that you can still have a personal human first service, and that's critical for building societies, because obviously where the building society sector differs from the banking sector is it's owned by its members are its customers. If it doesn't serve them well, they stop coming through the door, right? So it's really important to have that personal touch while embracing digital, and it's accepting that is possible. I think the whole paper-based home buying and selling process that's evolved over, well, it's not the last couple of decades, again, it's centuries, isn't it? Has led to really siloed industries and repeating processes that we touched on before, which causes frustration for customers, but it also causes frustrations for firm. And it's that horizontal integration that is really going to help us here, because one, everybody can see where the blockages are, if they're indeed blockages, and everybody knows where they're at, and it creates that certainty much quicker. So I think that interoperable data that enables businesses to process loans efficiently, and other parts of that home buying and selling industry to process their bit more efficiently and quicker, has got to be a huge win for customers. But let's not forget that we sometimes have an assumption in property and financial services that tech is, what the next generation, this new generation of first-time buyers that are currently probably in their 20s and buying over the next decade or so wants, is they want to do it all online digitally.
Yeah,
I don't think they do. I think a lot of them are really, really tech savvy, but they might not be financial services savvy. So it's utilising the tech and meeting them where they are, in terms of channel, making it slick and easy for them to upload their data, but they still need that human to kind of hold the hand through that process in some aspects as well. And let's not lose sight of that, because otherwise we end up just thinking that by using technology, we just end up with an execution only basis that doesn't always deliver the right outcome. So it's using technology to enable that personal interaction and give consumers confidence about the firm that they're dealing with.
Brilliant. Well, it's thanks ever so much for joining us as we wrap up now. My closing question is always a good one that I like to ask, which is, if we fast forward 5 years, which at the pace of change in the markets for which you and I exist right now is a long time, what would a future-proof mortgage market look like in your eyes?
I think five. I mean, let's. There's two things to me. There's the regulatory environment and there's the technology environment. So first of all, a regulatory environment that supports innovation and doesn't stifle it, because people's needs today are very different than they were 10 years ago. They'll be very different again. The way people work, gig economy, all of that. Side hustles, as I'm told, they're now called. We used to call them second jobs, didn't we? It was, let's make sure that we've got a regulatory environment that supports that. And I think a more, probably not completely in 5 years, but integrated, digitally enabled home buying process that provides the right info, as we've mentioned, to the right person at the right time and gives them certainty much earlier in the process to let them get on with their lives and know that their move is going to happen.
Brilliant. Paul, it's been a pleasure talking to you. Thanks again for joining us on the podcast. Anybody listening or watching that would like to get access to Paul's article that was written in the Digital Disruption newsletter, just visit the website novus-strategy.com. You'll be able to get a digital copy of it there. But for now, Paul, thanks once again, and we'll see you all again soon.
My pleasure. Thanks, Chris.